Lomas, Glenn Wiggle. We're actually going to do some video. Hopefully they're helpful clips on what to do in the with all the market volatility going on. Really unprecedented when you look at just the last few weeks, Glenn, the pullback in the stock market. Not that we haven't had pullbacks before. We've been through recessions forever. And, it's a natural part of the investment cycle. I will say, though, this one came down pretty quick. When you look at historical norms, sometimes it takes months or even a year or two to get these markets down 30%. It literally took, 14, 15 trading days in this case. Specifically, one of the questions we get a lot is 401k plans. Oh, my gosh, what should I do? And I've said for a while, there's different phases to investing. There's the accumulation phase and then the retirement phase. And I know we're going to do another clip on the retirement phase, but the accumulation phase is when you're adding money to your 401k plan. And, those 401k plans are tax deferred, so you can make changes without worrying about tax consequences, and a great opportunity to build long-term wealth. And I think way too many people make short-term mistakes and decisions in those plans. Two mistakes, and I'll hand it over to you. One is, they forget that it's a long-term vehicle. But the other side of it is they're really not diversified in those plans. They pick one or two options and then just forget about it. And then when the market blows up, they go, oh no, maybe I should look at it now. And I'll say, so I really think it's a great opportunity to sort of reset the stage here with 401k plans.
The other mistake that they make is they don't understand what they own. And I think, oftentimes it makes you, I guess, a little more confident that when you understand if you got the right balance or at least what your mix of stocks and bonds is. Yeah. Lots of people have gravitated towards these retirement type funds inside of their 401ks, which are great vehicles and great ways to participate because these time weighted type of things will get more and more conservative. You've seen these retirement 2030 or 2025, or you pick the year you're going to retire and so on. But what happens is oftentimes people don't understand what the underlying makeup of that allocation is. Right. And so what they see is they see their whole portfolio going down or their whole portfolio going up, and they don't really understand it. Be rest assured that within those portfolios, those money managers are rebalancing, right? If it's whatever fund family that might be in is taking care of that, they're managing it. You might not see it, but it's going on behind the scenes. Everyone's heard the old adage, if there was a sale at Walmart, everyone would line up, but when there's a sale on Wall Street, everyone would run towards the door. When you're an accumulator, this is an opportunity to be looked at as a sale. I know it's hard to do. It's when the markets are down and fear is gripping everybody and panic is seizing the markets. It's not easy to say, okay, I'm going to put more money in or I'm going to increase my contributions. When they start talking about going into a recession and layoffs and people missing paychecks, unfortunately, people get concerned and they tend to do the opposite. And that is they stop putting money in their 401k. So they reduce the amount that's going in, or they reduce their savings into the stock market or long-term vehicles in favor of putting money in the short-term vehicles. And that's a mistake. And I don't know that, most recessions don't last for years and years and years. They last for 6 months, maybe a year. We don't know how deep this is going to be or how shallow it's going to be or how long it's going to last. But what we do know is that right now the prices are down by 30% or more in certain cases. And if you're a longer term investor, if you're accumulating in your 401k, now is the optimal time to take advantage of that opportunity. As I said to somebody recently, a month ago, when prices were 30% higher, you were happy making those contributions. Today, prices are 30% lower, and that gives you the opportunity to accumulate a third more shares than you were accumulating just a month ago.
It's huge.
Look at it positive.
Yeah. And let me just add to that, though, because I do think it's a time to sort of dust off your statement and be proactive about what you're in. We did a call with our investment committee earlier today, and we were talking about the new leaders will not be the old leaders. And so it's really important that you're not just frozen with your 401k plan. You look at all the options. There's going to be an option that invests in bigger companies that pay a dividend. There's going to be an option that invests in small and real aggressive type companies. There's going to be an option that invests in international stocks. There's going to be an option typically that invests in short-term government bonds, long-term government bonds, corporate bonds, real estate. You need to know what all that stuff is. And you really need to put together a very proactive plan with your 401k plan. I mean, in some cases, this is the number one asset now that people have. It's not their house anymore, it's their 401k plan. And to just let it sit there and not understand what all those options are. And then more importantly, it's good to increase your 401k contributions. It's good to invest more now because things are cheap, as Glenn was saying. But it's also really important that you look at, especially if you have a bigger balance in your 401k plan. You got a few $100,000 in that plan. You can make some adjustments within that plan and really take advantage of down markets. Instead of $1,000 a month or $500 a month, maybe if you really are diversified and you have half your money in bonds, maybe now's the time to rebalance that portfolio. But if you don't know what you're in and you don't have a proactive plan in place, it's really difficult. If you're not a client, if you're a client, of course, you can come in anytime and we'll help you with that. And, and of course, we should be already having it we do already have it in our financial planning software. But if you're not a client, a great time to come in and do what we call a portfolio x-ray, which is, let's take a snapshot of where you're invested now, and let's compare that to how we think your risk tolerance is. We'll give you some homework, and we'll help you build out a model and a plan. So as the economy recovers, as the markets recover, you're participating in it, and you now have a plan in place for the future. And then as that market recovers, you want to make the opposite, right? And you and I, Glenn, have been doing that with clients for the last 2019 was all about rebalancing portfolios to take profits off the table. Well, 2020 looks like it's going to be taking those profits back and buying stocks cheaper, but that's the absolute reason why we did it. And within a 401k plan, imperative to do it. I mean, most 401k plans have no cost to make moves, no tax consequences. Those are two huge opportunities to take advantage of this thing.
Yeah, no doubt. Don't make the mistake that a lot of people, that emotion wants you to make, and that is, don't get too conservative at the wrong time. Again, if you're a long-term investor and you've got a proper plan and a proper allocation in your 401k, then ride it out and do the things like rebalancing, adding more money if you can. If you don't know what your allocation is, or if you don't know what's right, use us as a resource. You can call us at the office, 833-FIN-GUYS, or you can go to our website, thefinancialguys.com, and you can email us a question right through there. We're restricted on how much information or how much advice we can really give you specifically to your 401k, because that's the way the restrictions and rules are. However, we can certainly guide you as far as answering risk tolerance questionnaires and giving you some ideas on how the makeup of a portfolio might look like. And sometimes we can in fact take over that plan and indeed give you the proper information that we.
Education's the key in these times, folks. Get it. Now is the time to get it. No doubt.
Yep, absolutely. Thefinancialguys.com, or again, 833-FIN-GUYS. Use us as a resource. Thanks.